fundamentals really add up for the companies driving the rally, particularly the so-called Mag 7 global tech giants? Our guest here in the studio has his doubts. Aswath Damodaran is professor of finance at New York University Stern School of Business, sometimes dubbed the Dean of Valuation. Good to have you with us, and
Thanks
welcome to the city. So this is a market price for perfection.
Yeah, and I think it's been priced for perfection all year. And we keep our fingers crossed saying maybe there will be no correction. But there's going to be a cleaning up. Whether you call it a correction, there has to be a cleaning up. You cannot have back-to-back years like 2023 and 2024 and not expect something to be fixed leading into 2025. That doesn't mean you sell equities and head for the hills. But if you look at the earnings and the cash flows, the market is not just pricing in those earnings, but it's also pricing in an expectation that there will be no crises. And if you think about everything that's happened since 2008, the one thing we know, almost as a constant, every 2 or 3 years, something happens that's big and global. And I think you need to build that in, and the fact that the market is not building in is a little troubling, because you could say, what happens when you have that crisis?
As you said, it is troubling. When you take a look at VIX, it's at 14, and that against a backdrop of uncertainties, including Trump's tariffs, which could weigh on sentiment, which could weigh on growth. How are you looking at how markets are assessing the risks out there?
Yeah. If you think about markets, there are two games that go on in markets. One is what I call the pricing game. It's driven by mood and momentum, and there really fundamentals don't even matter there. And there's the investing game. You talk about fundamentals. The balance shifts over period. This is a pricing market. The reason I think fundamentals don't even come into play is when mood and momentum is this strong, they steamroll everything. So I think at the moment we have a pricing market where traders are driving the game. And traders really don't care. I mean, they might pay lip service to earnings and cash flows, but the truth is they really don't care. It's all about mood and momentum.
Mood and momentum, and you see that for the Mag 7. No stopping the Mag 7. And you say, find that opportunity to own a Mag 7 stock.
Yeah, and I think in a sense, I have never seen a group of companies carry a market for as long a period as the Mag 7, or the FANGAM, as I used to call them in the last decade, carried this market. 15% of the gain in all U.S. equities across 7,000 stocks has come from 6 or 7 companies. The numbers are mind-boggling. You know, we're talking trillions of dollars in market cap added every year. The Mag 7 companies alone, if they were a market, would be the second largest equity market in the world after the U.S. equity market. It's that big a chunk. But when you have mood and momentum, it's often built on some reality. The reality here is these companies are special companies. They've been able to scale up not just revenues and growth, but some of them are insanely profitable. NVIDIA has gross margins of 75%. I mean, that's outlandish if you think about it. You know, the operating margins are 60%. These companies, at least most of them, are cash machines. And so if you're thinking as a value investor, I've never seen cash machines as lucrative as these companies are. And I don't see the cash machines slowing down. I think the pricing might be getting out of control, but they are pricing in companies that are deservedly among the best companies in the world.
But you talk about NVIDIA, we're talking about PE of 54. It's already surged 180% year to date. I mean, how much more upside is there? I mean, Isn't this a company that's already overpriced, overvalued?
And I think when you talk about NVIDIA, you've got to bring AI into the picture. The reality is that AI for the last 3 years has been this buzzword that's driven stocks. NVIDIA is the one company that has actually made money on AI. Everybody else stalks the AI game. But this is the company that has made money on AI, because right now the money being made in AI is in building architecture, chips, cloud storage. And NVIDIA is 80% of the AI chip market. So it starts with that position of strength. Embedded in NVIDIA's pricing is the expectation the AI market is going to be huge. My estimate is about 3 to 4 trillion is the implicit estimate you would need to justify NVIDIA's pricing. And the test for NVIDIA is going to be, the architecture is going to get built. But ultimately, that architecture is a cost to some company. The 4 big tech companies, which account for 50% of AI chip sales, they're buying these chips, building the architecture on the expectation that they can create products and services that they can turn out. And right now, I can't think of a single company that is actually making money on AI products and services. There's promise, there's potential, and we don't know whether we can monetize these products and services enough to cover the cost of the architecture. So that, to me, is the big test for NVIDIA, is not whether people will buy the chips, but whether they can turn out products and services that people are willing to pay for.